India is currently witnessing a remarkable economic surge. The nation's stock market performance is outstanding, ranking among the top globally. This growth is backed by significant government investments in infrastructure development, including airports, bridges, roads, and clean energy projects. These developments are evident across the country, contributing to a robust and dynamic economic landscape. The gross domestic product of India is projected to grow by 6% this year, a rate that surpasses that of major economies like the United States and China. However, this impressive growth scenario is tempered by a concerning trend. The level of investment from Indian companies is not aligning with the overall economic growth. Investments in critical areas such as new machinery and factory construction are not increasing at a desirable pace. In fact, as a proportion of the total economy, these investments are on a decline. Additionally, while the Indian stock markets are attracting substantial investments, there is a noticeable decrease in long-term foreign investments. This situation presents a complex economic landscape with both positive and negative indicators. A critical juncture may soon arise where the government might have to curtail its extraordinary spending levels, potentially impacting the economy adversely, especially if there isn't a corresponding increase in private sector investment. Before we move forward, click that like and subscribe button and hit the notification bell to stay updated with our latest videos. This channel will keep you updated on the most intriguing videos on economic topics all around the world. India's current growth, while impressive, falls short of the nation's larger ambitions. With a 6% growth rate, the country is on a positive trajectory, but to achieve its strategic goals, a higher growth rate is needed. With the world's largest population, India aims to rival China's economic status and establish itself as a developed nation by 2047. This will require maintaining an annual growth rate of 8 to 9%. The current Indian leadership, under the stewardship of the Prime Minister Narendra Modi, who has been in office since 2014, faces significant challenges in this regard. His focus has been on fostering an environment conducive to business for both domestic and foreign companies. However, a gap in investment poses a considerable hurdle. Modi is actively campaigning and encouraging national support for his achievements, yet there is a hesitancy to address the issue of slow investment among executives, bankers, and diplomats, stemming from a fear of appearing overly critical. Meanwhile, investors are exercising caution, reflective of an economy that exhibits both promising strengths and notable vulnerabilities. There is a general consensus that India stands to gain from the economic downturn in China, largely triggered by a significant property crisis. Additionally, the rising geopolitical tensions between China and Western countries are creating further opportunities for India, prompting international businesses to consider relocating their manufacturing and production facilities from China to other countries. This shift presents a unique opportunity for India to become a new hub for global manufacturing and supply chain activities. The World Bank has recognized and commended India for its significant investment in infrastructure, particularly during the challenging times of the pandemic when the private sector was in dire need of support. In response, the Indian government has intensified its efforts, focusing on substantial improvements in key areas such as roads, ports, and power supply. These enhancements were crucial in transforming aspects of the infrastructure that previously acted as barriers to business investments. However, the World Bank emphasizes that this considerable government expenditure in infrastructure should serve as a catalyst for increased corporate investment. The organization highlights the importance of the crowd-in effect, a phenomenon where government investments in infrastructure, such as new ports and industrial parks, encourage private companies to invest in these areas, stimulating companies to establish new plants and create job opportunities. The World Bank has been anticipating this effect, expecting a significant uptick in corporate investment following the government's lead, a trend they have been predicting for nearly 3 years. They highlighted that merely increasing public investment is not sufficient to boost confidence in India's economic growth, and stressed the need for deeper reforms to encourage private sector investments. Despite record-setting performances in the stock markets, there is a noticeable hesitancy among foreign investors in startups and acquisitions. The stock market in Mumbai, which is India's financial hub, has seen its value soar to nearly $4 trillion, surpassing that of Hong Kong and marking a significant increase from $3 trillion the previous year. A substantial contribution to this growth comes from India's small investors, who find stock trading more accessible and straightforward compared to the complexities involved in corporate acquisitions and sales. However, this surge in the stock market contrasts with the decline in foreign direct investment, which has fallen from an annual average of 40 billion to just 13 billion in the past year. One key factor influencing businesses' hesitation to invest in India is the current government's strong stance and influence. Businesses generally seek stability in political leadership, and India's leadership under the present government has shown remarkable stability. The government has demonstrated its strength and influence by achieving significant victories in major elections across key regions, positioning the leader for a likely re-election. This stability is seen as beneficial for the business environment, as the government openly supports business development. However, the government's approach to economic management is characterized by a high degree of intervention, creating an environment of uncertainty for businesses and making them cautious about investing. The interventionist policies mean that businesses must navigate a complex and sometimes unpredictable landscape, which can pose risks to their investments, reflecting a balancing act between the benefits of a stable political environment and the challenges of an interventionist economic policy. In a sudden move in August, the Indian government imposed restrictions on the import of laptops and computers, aiming to boost domestic manufacturing and having a significant impact on businesses reliant on these imports, causing considerable disruption. However, this policy was almost as quickly reversed, illustrating the unpredictable nature of such economic decisions. Similarly, in July, the government introduced a retroactive tax of 28% on online betting, significantly affecting a $1.5 billion industry. Amid these changes, certain businesses with close ties to the current political leadership have experienced remarkable success. Notable among them are two major conglomerates, Reliance Industries and the Adani Group, which have diverse interests across various sectors of Indian life. These companies have seen their market influence expand significantly, with their flagship stocks now valued at approximately 6 times their worth from the time the current Prime Minister took office. This growth highlights the differential impact of government policies on various sectors and businesses within the Indian economy. In recent times, several smaller companies in India have faced significant scrutiny, with tax enforcement agencies conducting high-profile raids. Navigating the regulatory landscape in India has been particularly challenging for these companies, contrasting starkly with the experience of larger conglomerates. Despite these challenges, the past 9 years have seen notable improvements in India's business environment under the current government. Key systems have become more efficient, a reduction in various forms of corruption has been observed, and the digital transformation of commerce has opened new avenues for economic growth. Foreign officials responsible for facilitating investment in India have expressed ongoing concerns about the challenges of doing business in the country. A primary issue they often point out is the extensive bureaucratic red tape, which involves excessive involvement of officials at every stage of business operations and decision-making, resulting in slow legal processes and difficulties in enforcing legal judgments. Another significant hurdle for attracting long-term investment is a particular aspect of India's economic structure. The strongest demand within the Indian market comes from a relatively small segment of wealthy consumers, estimated to be around 20 million out of a population of 1.4 billion. This affluent group has the purchasing power for high-end European consumer products, luxury homes, and top-tier automobiles. In contrast, the vast majority of the Indian population grapples with rising inflation, particularly in essential commodities like food and fuel. This has led to caution among banks in extending credit, especially to businesses, due to concerns that most consumers are likely to limit their spending in the foreseeable future. There is an expectation that the development of new and improved infrastructure in India will ultimately lead to an increase in private investments. The concentration of wealth among a small portion of the population has the potential to gradually uplift more incomes over time. A major uncertain factor in India's economic future is its ability to capture a substantial portion of the global business market, particularly from China. A notable example is Apple, a leading global technology company with a valuation of $3 trillion. Apple is progressively shifting parts of its supply chain from China to other countries, including India. Currently, India contributes to around 7% of Apple's global iPhone production, a figure that is projected to rise to 25%. This shift could open significant opportunities for India in the global marketplace. The situation calls for an open-minded approach to the evolving economic landscape.